Hey everybody, it's Kimosabi, finally giving you an update after this long drawn out crappy price action we've been having. It was nice to get away a little bit, not think about it too much while we're still in a downtrend, still lower lows, lower highs until you close above 90K. So that's kind of what we're looking for. But let's zoom out to the 2 day chart and look at the overall trend that we have going on. There are some that are counting this like an Elliott wave as a one, two, three, four, and that's wave five. And that is a legitimate count. Looks correct. Looks like it has completed. Wave five looks good. Has the divergence that it's expected to have. So what could be happening from there? I think Tony the Bull presented this idea of having like an A, B, C type of correction. Maybe take out those lows. I'd probably expect it to get down below 38 if it is to crash like that, and maybe 31 or something like that. That is if things get pretty um, downside heavy. It is a valid argument. One day at a time, we're definitely making locally, we're making lower lows. You'd expect a lower high, and then what comes after that, we'll see. Overall, in all the swings, like the weekly swings, you do have a higher high relative to that high, and now price is trying to put in a higher low right where it's supposed to be, according to trend. If we're to just measure out how much taller this is, then down here, we're in the area where you would expect the higher low to come in, just to maintain the upward trend. So there's an argument to say we're bottoming here and we can expect higher, um, regardless of what some of the indicators say and wave counts and potential. So I was thinking about a potential wave count that says higher from here and proposing that potentially what we have going on here is an interior wave one, two, three, four, and five, and that's wave three. And what we're currently working on is a wave four. So in the bigger picture, what you would have is from the bear market lows, you would have a one, this is two, and then one, two, three, four, five. Up for wave three, currently working on some kind of wave four that should go a little bit lower eventually before having likely an extended fifth wave that gets up pretty high. That could be a FOMO wave. I'd say that looks pretty FOMO-ish. People would say they missed the boat and they're like, oh crap, it's doubling in price again. So I'm basing that assessment or that wave count on the current retracement. The current retracement is, let's get it from here. From here, this potential wave two, all the way to all-time high. You say we are retraced back to the 382 Fibonacci retracement, and we're dancing around the 382. That's very common in the first wave of a wave four, but ultimately price comes down and hits the 0.5 fib retracement, similar to what we saw happen last year, where we had price again dancing around the 382 and eventually tagging the 0.5 and then heading up for the fifth wave. So we could be repeating something like that, where we're dancing around the 382 and eventually hit the 0.5, which currently stands around 67,000. Maybe it's 66,666, just to be diabolical, if you will. So if that price action is to play out, you would get a bounce into a lower high from here. I would say this is probably your A wave and working on some kind of expanded flat before coming down. And I would look for support at the 0.5 fib. If you get a nice bounce off of there, then hopes are still alive. If you start getting below 50,000 and stuff, I'd say, yeah, it does not look good. Even if you bounce at 50,000, I'd say that's a sell as soon as it retraces back up. That would be an A wave, B, and your C leg should come down to like 20K. So I don't like where this peaked out at 109. It kind of just doesn't make sense, which those are very nice tops when they don't make sense. It's great, but let's see what the wave action here is kind of saying on the 2-day chart. Might want to zoom into a 1-day chart, but kind of expecting this to play out. An interior here, I can see 3 waves down. Those match pretty well. Let's zoom it into a daily to make it more clear. So on a daily, I'd actually expect this B wave to be coming soon, and the C leg to be very sharp and abrupt, kind of come down. Real good shakeout, and that would just be maximum liquidity again, the way the market maker does it. Pops up, pops down, pops up, and then flushes down to get the maximum amount of accumulation in this area if the market maker is not done. Market maker could be done here. This could be 3 drives to a low, and that's all you get, and then you're going to be pushing up from here. No chance of that happening just yet until you're starting to close dailies above previous daily candle closes. Then you have the higher high, you try to buy the higher low. But I wanted to offer the wave count of 67,000 as potential support because that is the 0.5 fib retrace, and if you're so inclined, look for entries down there. Let's draw on this downtrend and see what it's looking like. In this downtrend, I noticed this. This comes to mind very quickly. They just look like they match. This looks like a match and completing pattern. And, well, it's bottoming. Could that be the bottom? Yeah, potentially. Maybe you have some kind of ABC here, up, and then another ABC down. That's a double correction. That can be your A wave. And then you're going to go up for a B wave. And then back down for like the C leg. Since those two match so nicely, kind of saying that this is your A wave, this is a B wave, and now you're working on some kind of C leg to come and take this liquidity up here. Once that liquidity is taken, you'll probably have a very sharp rejection. You got breakout traders and whatnot, and they're just going to get flushed, especially if it's like a really quick move, maybe over a weekend. But watch for your liquidities here to be taken, and eventually maybe up to there, 98,000, 96 to 98,000. You're likely to see sharp rejection from there. And that's just to show everybody that 100K is resistance, heavy resistance. You're not going to break above that ever again. And then people get very discouraged, and maybe you make a new low, and out of there, you come out stronger than ever. If I'm to look at this from a market symmetry standpoint, I'd say this move down is complete where it is. It looks good. And what we might be working on is this into a higher low. So this would mean this is the bottom. Not to say it's not going to be retested again, but that makes a slightly higher low. And then you do this, because that will look like an ABC. You'll have a lot of selling, people going short there. And then maybe you get one of those weekend closes above 100K, and then it's zoom time. You currently do have price trying to break out from this downtrend, which is what makes me suggest that this pattern is complete to the downside and you're going to be doing something else. What it ends up being, who knows, but it could be repeating what previously came or something new. But we still have low, lower, high, lower, low, lower, high, lower, low. This is where we're going to find a lower high or a higher high. As soon as you get a higher high, you can try to buy the higher low at previous supports. Especially if it happens during the daily cycle lows that Camel Finance is looking at. He's looking at early May. I'm proposing you might be as late as the 24th of May, based upon various things that I won't show until probably May 20th to the 24th to give reasoning to buy. There's a reason why I think May 24th may be the day to buy. But look for the next cycle low. Maybe we're repeating this pattern for the next cycle low. That would be really great, especially if we hold that 74,000 as a low. Just back test it again. So that would be your spring, back test to spring, show strength, and then off you go. So for trading purposes, if you want to get into a swing trade, there's really nothing you should be doing. Well, unless if you're extremely aggressive, you're managing risk off of this low, but you're still waiting for a higher high. You're waiting for the breakout, and you're waiting for a higher high. Maybe it's a back test of that trend line on a higher low at previous supports. And then you manage your risk off of that low. If that stop loss is taken out, I'd look for 67,000, and see if you start getting an uptrend out of there. And then you may be repeating this pattern or just this pattern out of there, and then you go. And that could be the fear-driven fifth wave of a commodity cycle. So this thing could extend farther than anybody would expect, and I suspect the fear would have something to do with the U.S. Treasury market. So where is money going to flow to once it exits the treasuries? Depends on how the stock market is doing, which that looks pretty toppy. I'll do another video about that probably tomorrow. But where's it going to go? Where's the money going to go? Likely goes into gold, and maybe Bitcoin is about to show its hand here. Is this a risk on or a risk off asset? Well, it's sort of half and half, because a lot of the market participants that have entered this past year after these ETFs, they are indeed treating it like a risk on asset. But people that have been in the Bitcoin space for a long time see it as the ultimate risk off. It's the ultimate safe haven. So maybe the price may want to flush out anybody that does think that this is not a safe haven. And then once they're flushed out, then price can be a safe haven, or Bitcoin can be a safe haven with regards to its price appreciation. Hard to say, really. But you do have to trade the chart that's in front of you. And currently you are in a downtrend until you're not. Then you might get an uptrend out of here. I think Ethereum looks like garbage. XRP is still holding up fairly well. So it's kind of a coin toss with regards to the shit coins. But if you're trading Bitcoin, look for your higher high, get in at the higher low. You do have liquidity building under here, so I think any move that does move up to like 95, 96 is going to flush down there regardless. So that would be an entry if you get the higher high close up there. If price comes down first, grabs that liquidity and pops up, it may never come back. It's possible, but I don't like that, because it didn't close a higher high and give me the higher low. It just grabbed liquidity, and then it might just flush down and grab that liquidity. So for optimum trading, I'd like to see liquidity remain down here, get the higher high close, because then I know my entry is at that liquidity, stop loss at the low. So that's the update for now. Hopefully we get some price action in the coming days. That kind of gives us more of a structure to play off of. Looking for either this low to hold or 67,000 as a 0.5 fib retrace for now. I don't think the cycle is topped. I think the cycle is going to top much differently than most expect. So this may seem like a longer cycle than you think, but it's just cycles doing cycle things. I don't know. I'll update more hopefully tomorrow, and we get some more price action, and hopefully we get a weekly candle close, higher high. That would be good to see. Until then, keep them stops tight and have a good night.